So, good evening. As always, this is the end of the week Saturday session. We're going to talk about the markets, how it closed last week, and how we should strategize ourselves the next coming up. So, it was a truncated week, right? It's just 3 days of trade. We're looking at the Nifty futures chart in front of us with the monthly, the weekly, and the daily time frame. And let me just turn this Heiken-Ashi to the bar chart because it is important to understand the nature of the sharp revival, bounce back that we just observed last week. A week back, a Monday morning was a huge gap down, lot of pessimism. And the lows, the erstwhile fractal lows were breached momentarily. Then a bit of a bounce back, a consolidation, gap up, extension. And I like to call this kind of a price behavior a typical short squeeze. Anyone who had gone short in this area would have seriously faced the pain or is still facing the pain. Now, the nature of the move, the nature of the bounce back it's been in the nature of a V-shaped, very sharp recovery. You'll agree with me. These kind of market reversals are not easy to trade. It's very difficult to time a long trade anywhere in this area. Because if you are following any kind of indication from the charts, if the price is positive or improved sentiment or some kind of an indicator giving you some positivity, it will be very difficult to get it from the daily charts. If someone trades a lower time frames, maybe yes. So first and foremost thing is, if you have not been able to capture this fall or this rise, I think you are okay. And what has happened, and I've been saying this for the last week and a half, is we've just seen our long-term portfolio go down and come up back again. That's essentially what has happened over the last 2 weeks. From a short-term trading point of view, I do not see much has happened, unless you're like a crazy cowboy trader. But I'm talking about index, not stocks. Now let's break it down. Let's understand. We are more or less coming towards the end of April, couple of a week and a half to go. And what we see from the monthly charts, we'll start with the monthly on the left hand side, is the erstwhile zone of fractal highs. We had a retest during June, and the current retests are very, very clear, close to that 22,600, 22,500, even it goes sub 22 for a very short span of time, and it gets bounced back. So this area is looking out to be the immediate long-term support for the Nifty. And it's understandable because it's got some serious long-term instances, multiple long-term instances where it has found a bit of a support. And so the market is bouncing back from some decent long-term level, number one. So far, it's just a bounce back. It's nothing more than a bounce back. Our monthly charts are still very much synced on the downside. It's giving us a high-ranged bounce back. So structurally weak, but at supports and bouncing. This bounce back looks decent on the weekly time frame. I was talking to you about the weekly momentum improvement. And now, after a sharp negative Heiken, we have an equally sharp positive Heiken. So that's been, like an yin-yang, just opposite, one opposite to the other and very close to one another. What it has done is it has given us a couple of levels. Level number one is, of course, the erstwhile fractal high. And on the downside, yes, we can use this fractal low. We may not use this because it was just a sharp opening on the downside and just a, one-off of a trade. That's it. So this is the kind of zone. Someone would say that, isn't it looking like a double bottomish kind of a behavior, double bottom, and this is like a W bottom, and maybe, but we have to wait for that breakout. Weekly charts, momentum has improved, trend, sharp improvement. Any kind of a trader who's planning to trade from the weekly charts will have to deal with a very wide SL. Just doesn't make sense. So it makes sense that the weekly charts consolidates a little bit, and then if it picks up, then it makes sense to trade if someone is planning from the weekly time frame. What if someone is planning from the daily time frame? Well, the momentum has now improved, the trend has now improved. If I turn this to a Heiken-Ashi chart, you will start to see some positive Heiken-Ashis for the last 4 trading sessions. It's not giving us a pullback. The range has expanded heavily. So I think I will apply the same logic that listen, um, this bounce back is not comparable to the earlier bounce back. This bounce back is V-shaped, sharp. This one gave a small move. This one gave a consolidation. Then it gave a breakout. So this was more tradable. This was more, it was possible to trade this more. It's difficult to trade this one. So rather than being an impulsive trader that I'm not able to catch anything, let's get on board. I don't think it's a good idea. I think what a good idea will be that let's wait. Let's wait for some consolidation and then go for it from the Nifty's point of view. What about the small cap, mid caps and the rest of the sectors? What are we going to do now is we're going to compare this with the RRG graphs. Okay. So this is the strike analytics which I use. We get the option of RRG graphs there. I would like to use the benchmark as Nifty 500. That's more broader. I'm going to deselect few of these which I do not track that often. So for example, something like media is something I don't really track that much. 100, 250, Nifty small cap 50, mid cap 50 रहने देते हैं. And the rest we don't need that much. Mid cap too. A lot of mid cap, small caps indices, Nifty 100, 200, total market. Those are the ones I'm taking off. I'm more interested in the sectors. I'm more interested in the themes, right? Yes. So that's more or less it. Let's increase the time frame from daily to weekly, and I'll go back to the chart once. I'll come to the weekly. And I would like to see that the last fractal low was here. Okay. Since then, it was 1, 2, 3, 4, 5, 6. It's been 6 weeks from this bottom. Okay. If I, 6 weeks back, I was somewhere here. 6 weeks down the line, I went up, I came down, I went up again, and I'm higher. So Nifty's point of view, 6 weeks is higher. So if I do the RRG graph comparison analysis on the 6-week time frame, those where I find that percentage gains are positive and RRG readings is also positive, those should be my pocket of strength. And those where I see that the 6-week price performance is negative and the RRG is also negative, of course, that will be my pocket of weakness. Let's try to see how it looks like. Will we get any kind of sense out of this or not, what we just discussed? So 6 weekly time frame. These sectoral and thematic charts, sectors, indices to be precise, and the benchmark being Nifty 500. Let me fit it and let's see how it's looking like. Okay. In the leading quadrant, which is those who are completely unaware of what is this, right? So this is a concept to understand relative strength. We don't have to go to the maths and the formula of it. The concept is leading, weakening, lagging, and improving. Those which are in the leading quadrant, the green quadrant, are doing relatively better than the Nifty 500. So if the Nifty 500 had gone up, these sectors must have gone up more. If the Nifty 500 has fallen, then these sectors have fallen less, relatively stronger. Then the weakening ones, which are slowly losing strength, then the lagging, which are relatively underperformers, and then the improving. The beauty of the RRG concept is it flows in a clockwise manner. It always flows in a clockwise manner. But it doesn't flow as smooth as a clock. What I'm trying to say is from a stock or a sector which is in a leading quadrant will not always go to weakening and beautifully to lagging, then improving. No, may not. May or may not. It can go to leading and weakening, then back to leading and weakening, and then come here and do. So it can have its own twists and turns and detours, but overall flow is like this. Just a quick intro. explanation for those who find this relatively, new. Number one, which are the sectors which are in the leading quadrant? There's quite a few of them. Now remember, we're looking from a 6 weeks point of view. When I take a look at the percentage gains, okay, and I can sort it here. I'm pretty certain I can sort it. There you go. So private banks, Nifty Bank, PSU Bank, financial service. You can see the tail. You can see this tail that for how many weeks out of this 6, how many part of it is within the quadrant. This is the tail length. PSU Bank, just see this. Just see PSU Bank and financial service. Both of them are in the quadrant, leading quadrant. Both of them has gone up almost 11%, 12%. Both of them are very similar. But when I take a look at the tail, I can see that the financial services, it is in the quadrant for the entire 6 weeks. Entire 6 weeks, it is completely within the quadrant. But if I take a look at the PSU Bank, it has just entered the leading quadrant. You can see 6 weeks back, it was lagging. 5 weeks back, it was lagging with some improvement of relative strength. Then from leading to improving and now. So there's a difference. Someone who will look at the percentage change will say, okay, both of them have gone up 12% in last 6 weeks. But there's a hell and heaven difference between their relative performance. So let's go back to what we were trying to figure out. These are your pockets of strength. Okay, from 12 to 13% gain, the next slab is 7%, 8%, 6% kind of, wherein you have the infrastructure and commodities. And the only sectoral index which is in the leading quadrant, but in the last 6 weeks, it is negative. Interesting. Let's take a look at this guy. And if I click on the Nifty metal, you'll see that earlier it was doing good. And then it has started to lose some relative strength. And last 6 weeks, it's actually negative. All right. We're going to stick to these names and we're going to flip. We'll go to our trading view charts and try and understand how they look like. Bank Nifty happens to be the most important pocket for the Indian equity markets, no doubt about it. Let's do a top-down approach. Monthly charts, exceptionally strong, no problem. But we do not have a sync. We have a clear, distinct diverging behavior between the trend indicators and the momentum indicators. Whenever, please remember this, especially those, who are listening to me for the first time or relatively new. Whenever you see a distinct diverging reading between the trend and the momentum on whichever time frame, this is the monthly time frame, it is very likely to bring volatility, choppiness, range-bound market behavior on the next lower time frame. So from the monthly, when I come down to the weekly, you're headed for some choppy, volatile behavior. All right. When I come to the weekly, I see that it has bounced back pretty well. It has led the move. It has gone. We remember a week back, CNXFINANCE had hit an all-time high. Remember? And now the Bank Nifty is almost there. If not, probably in decimal levels, it has hit an all-time high. Doesn't matter. But sharp revival. From a short-term point of view, yes, you had the momentum, the trend, the pullback, extended move on the upside. So all those things have happened. Question mark is what now? Should I be looking for new trade here? My answer is no. Just doesn't make sense. I think I'm late. But you'll say that, listen, the relative strength is positive. It's one of the biggest sectoral gainers. Why not? Because of the fact that the higher time frames momentum trend is not in sync, it just doesn't make sense to do any kind of a breakout trade here. Not at all. It makes sense for things to slow down and consolidate. And if this index is really planning for the mega breakout, then it will 100% consolidate and should give us the big breakout. So do not chase the Bank Nifty. Yes, it is positive. I am not going to look for a long trade in Bank Nifty does not mean that I'm going to short Bank Nifty. Okay? I think this is important to understand. My view is bullish, but from a risk reward point of view, I'm not going to chase the Bank Nifty. That is the conclusion from the Bank Nifty. CNXFINANCE, wonderful looking weekly chart now, which hit a life high just 4 weeks back, is now extending beautifully. And this is a clean reading of momentum, trend, pullback, and pullback trading. Over here, you can see that it was also not in sync and it went through its stage of volatility. Now it's slowly improving, slowly. So finance charts, stocks, individual stock charts also will look relatively better. Now, Bank Nifty is really good because of the private banking chart. And the PSU bank we saw from the RRG chart has just started to do a catch-up game. Do you understand where the PSU lies and where the Bank Nifty lies? This is where the PSU has closed vis-a-vis its all-time high. And take a look at the private bank, where the private bank has closed and vis-a-vis its own respective all-time high. So clearly it's the private banks which have helped the Bank Nifty, the financials have helped the overall. PSU bank is just trying a catch-up game. So which means that PSU bank is in the leading quadrant. It has just entered the leading quadrant. The overall pack has improved significantly. Will there be some kind of a rub-off and the PSU will pick up? So I leave it to you to check some meaningful PSU banking names if you find any kind of opportunity. It has some headroom, but headroom does not necessarily mean it will fly. Headroom also means there are past resistances to deal with. So PSU bank maybe we can see here. So clearly banks overall relatively strong, not going to chase, will wait for a cool off. Metals, you remember metals? That was a weird one where if we consider the last 6 weeks, it's actually negative and it's been there in the positive quadrant, leading quadrant. This is where the reading is relatively little tricky. Let's do a top-down approach. Monthly charts are weakening, they're not good. Weekly charts, really crazy move on the upside, then a huge correction. Clearly what is happening with the CNX metal is this is a pullback or a bounce back after this sharp correction. If I take a look at the short-term trend momentum, monthly trend momentum, weekly, they are all negative. Which means that if I'm planning to take any trade from the daily time frame, both my higher time frames are predominantly negative. So my trend momentum sync positive over here, I should not be too excited about it. I should not be too excited. On the other hand, if this pack slows down and starts to lose momentum, and if it drops, then this is where the derivatives trader should look for a opportunity on the short side, if that happens. Or else on the flip side, what can happen? It can continue to show some strength, trend will reverse, momentum will go up, it will go somewhere here, it has got some resistances, etc., etc. But CNX metal, though it is in the leading quadrant and it's losing momentum of RS, it's the only negative, price-wise negative sector within the leading quadrant from a 6-week point of view. I'm looking at it from a point of view of, will it lose its grip? If it does, a derivatives trader should look for shorting opportunity here. Okay. Now let's go to which are the ones which have weakened. Let's stick to the clockwise directional flow. In the weakening quadrant, we have consumption and healthcare. Consumption in the last 6 weeks have been really, can you see there? It's right in the middle somewhere. It's extremely volatile in itself of relative strength. It was leading, it fell, it bounced back, it fell, it bounced back. So this is an example what I was telling you. These wiggly worms do not actually move in a beautiful circular manner. It zigzags, then it falls, etc., etc. This happens most of the time when that particular index is in a range-bound, volatile range, choppy, no clarity. That is when these kind of readings happen. Consumption and then healthcare. Healthcare, on the other hand, is pretty much, horizontal, going right to left. Going right to left on this quadrant means you're losing your position of relative strength. You may be going up. You may be going up with the Nifty 500, but the Nifty 500 is actually going more. You're losing relative strength, ratio there. Should we take a look at their individual charts? CNX Pharma first. And what do we see? We see a similar kind of a bounce back. We do not get a very good looking monthly chart. Weekly charts have improved. Not bad weekly charts. Range had expanded. Now, considering adding this with the chart of TradingView CNX Pharma, I would say that wait out and let's see whether this move slows down and reverses or not. See, RRG graph is saying that you are in a weakening quadrant and you're losing the relative strength, which is sell on a rise essentially. Do we have a rise? Yes, it's a rise. So we should be looking to sell. Well, if I take a higher time frame, the trend is predominantly negative, though the trend momentum are not in sync. The higher time frame is losing some. So there is a bit of negative readings. So can I look for some short here? Bilkul nahi. It's definitely no. The trend is not in my favor. The momentum is not in my favor. The Heiken is not in my favor. So what should I wait for? I should wait for some kind of a slowdown of Heiken. Maybe the best thing would be get some negative Heiken like this. So keep it on your watch list, pharma. Don't look to go long right now. Let's see that after this move, what is the nature of the retracement? Ek move ke baad, after a move, it retraces and then goes up, right? We would like to see the nature of the retracement. If the nature of the retracement gives me negative Heiken and it breaks the low and falls, that's where a derivatives trader can look to go short. Right? So we've got two sectors which can be there in our watch list. Look out for downsides. That's healthcare and metals. Now, quite a bit of names though there in the lagging quadrant. I can see the small cap is lagging. Let me fit it here. There you go. Small cap, mid cap, consumer durables, realty, auto. This is pharma. This is healthcare. They have a lot of overlapping names. So clearly pharma and healthcare you should keep in your shorting list if you're into derivatives. And and this wiggly worm is very, very clean. See, these wiggly worms, all these calculations are based out of price, isn't it? And we know if we open the CNX IT chart, it will be a beautiful downtrending chart. And that's why the wiggly worm itself has also come out like this. So shouldn't we start with the small cap, mid cap first? Let's get done with the broader markets, small cap, mid cap. Very, very similar looking long-term monthly chart, decent revival, reversal, very sharp. And so, this is the mid cap, this is the small cap, almost mirror image. The view is this. After a very sharp correction, a very big gap down correction, it's a sharp revival. Okay. The revival has improved the trend and momentum. The revival has taken me back to my previous fractal high. It's a make or break, which means from here on, if you consolidate a little bit, you hold on to the positive trend momentum, and if you give us the breakout, then we can have another fresh move towards these levels. On the other hand, if these levels are strong enough, if the RRG graph's weakness is very prevailing, then this breakout will not come. Then the retracement will lead to further downside. Which one? We don't know. Should we stick to price? 100% we should stick to price. So we should wait out. Small and mid caps, wait out. Again, the same logic. Let's see how it retraces. What is the nature of the retracement? If we see that if the retracement is deep enough, the momentum all of a sudden slips on the downside, then RRG is telling us it's weak. Price has not able to hold on. It's slipping. That's the short. On the other hand, if the price really holds on and it gives us a breakout, then all these RRG graphs that you're seeing here, they will start to go up. Okay, so let's wait for the make or break. The 3-4 sectors that is clearly there is the realty, auto, and IT. Pharma we have discussed, and consumer durables. Let's start with IT. Now, IT is clearly on the downside. Wonderful sell-off Wonderful, clean, good-looking sell-off. I don't want to mean wonderful in terms of losing value of our IT portfolio, but in terms of a sell-off, in terms of the way it looks on the charts, it's actually very clean. Monthly, not good. Weekly, not good. Daily, again, honestly, not good. It's been consolidating for a few days now after this sharp sell-off. But I think that the probability of going further down from here is relatively lesser. So it will try to do some kind of a reversion to mean. It will try to stagnate, create some kind of a base. Question mark, do I have any signs of base building over here? No. So I'm going to stay away. What if I look to short? I think we are late. It's better to wait for a bounce back and then short. Look for a bounce back and then short. So IT, negative, stay away. Do not go short if you're into the derivative segment. If you really want to short, wait for sell on a rise. Wait for the bounce back. Auto realty, CNX auto. Okay, not a very good looking monthly chart. Weekly charts are showing some signs of divergences and Heiken-Ash is turning around. Okay. Daily also okay. I like the fact that if you take a look at the behavior of the trend and the momentum indicators, they have diverged pretty well, which raises that this bounce back is of a good quality. अब इस bounce back में तो हम लोग trade कर नहीं पाए because it was really sharp. It was difficult to trade this bounce back. All that we can do is, now that you have established the momentum and the trend, if you just give us a small little retracement and give us a breakout, we will be more than happy to trade. So this should be your mindset. What about on the short side? Same logic. If the market fails to hold on, if by the time it's next Saturday and I meet you after a week and we see that auto is somewhere here, then it has flipped. Story different ho jayega. ठीक है, we'll see that, but that's essentially should be your approach. Realty also, I think, will give you similar kind of a feeling. Yes, the weekly momentum has improved. Nothing great on the price front. Same logic from the daily chart. Just see whether the slowdown retracement leads to a further breakout. If yes, go for trades then. If no, stay away. If you're into derivatives, you can look to short. Same logic. And then you had the consumer durables. Consumer durables big in terms of from Monday's low to where it closed in 2 weeks has been a big move. Good looking daily sync. Again, not so good of a monthly chart. Big Heiken-Ash on the weekly time frame. Though it is a range contraction, overall in the last 2 weeks, lot of price behavior has happened in terms of low and high difference. I would say the same thing. Wait for the consolidation and wait for this next move on the upside. So as of now, whatever we have reached, we have one more quadrant to deal with. We started by saying that the banks, the finance and the private banks led this move very well. They are stretched. It doesn't make sense to go long in this particular pocket right now. Market might consolidate. PSU Bank amongst these is a late bloomer and it's just picking up right now. We might see some upsides, but relative strength is not very good there. Then we found sectors, which was CNX metal, tricky, can slip. And we also found that we discussed auto, we discussed pharma. I think I would rather add metals and pharma in the same category. These two sectors looks interestingly tricky. If the markets give us a deep correction or a cool off, these guys may come down. We need to keep a watch on that. And then we discussed auto, we discussed realty, we've discussed consumer durables that make or break. From here on, the retracement is very important. IT, stay away. It is weak. Just like we are saying the banks are very strong and stay away because it's stretched. IT is the same thing. It's very weak. It's stretched. So stay away. So the last quadrant is the improving quadrant. I personally like this quadrant the most because this is the quadrant which has improved or improving. And these are the guys which will take me to the leading sometime in the future. So The good thing to see is most of them are positive in the last 6 weeks. So the PAC names are there. The FMCG, you can see how the FMCG is behaving, falls, then goes up. So it must be a choppy candidate. CPAC, similar kind of names. Energy, this is interesting because after the banks and the IT, the third most important sector which enjoys weightage is the energy, which is energy and oil and gas. You'll have a lot of overlapping names, MNC and manufacturing. I'll focus on energy. That's the main sector I would like to discuss. So energy had gone through a huge correction, to be honest. Monthly charts taking a breather with an HAGB. Weekly momentum clean, trend sharp revival. Same story. I'm probably repeating the same sentences over and over again. Do I have any strong sign of a divergence, of some kind of a base building formation on the weekly? Sadly, the answer is no. But if the price goes above this fractal high and consolidates, energy can give us further upsides. So I will keep auto, energy, consumer durables, and why not FMCG? We have not spoken about FMCG. FMCG, now you can see what FMCG has done. FMCG has extended. This was a sharp that Monday's gap down and it just went up. So this is exactly what I'm talking about. Based on this, on the nature of the retracement, let's see if we get the follow through breakout or not. If we get this kind of a reading in auto, energy, consumer durables, realty, then it will open up some rooms for sectors to catch up with the private banks, right? And on the other hand, if the retracement is deep enough, then we can look for pharma, healthcare, metals for some opportunity on the downside. That is, if you can make use of those opportunities in the derivative segment. Overall, I'll end this discussion on the overall market by saying that V-shaped, sharp recovery, not easy to participate. Trend has all of a sudden reversed back positive. Doesn't make sense to chase. It's a very, very reactive market. It's reacting to the statements. So it's better that we wait for a consolidation pullback and then look for long opportunities, right? Okay, so that's my view on the various sectors. Now I will quickly take a look at your doubts and questions.